Well, everybody, I think we'll get started here today, and I know we have about 32 people on, and so I know people will be tagging on here in a little bit. We've had a lot of people respond and reach out to us, and so welcome to today's webinar. I am Ryan McKnight. I'm a member of the State Bar of South Dakota and an instructor in the Ness School of Management and Economics at SDSU. Before we get started, I'd like to go over a few items so you know how to participate in today's event. First and foremost, do you or a lawyer, law student you know have a drug or alcohol problem or are struggling with depression or anxiety? Lawyers Concern for Lawyers is a confidential and independent resource for the South Dakota lawyers, law students, and their families. Your referral or visit with LCL is strictly confidential and privileged. Call Becky Porter for more information at 605-391-5191. Becky is an LCL member, and your communications with her are likewise confidential and privileged. Today's presentation will last approximately an hour. You will have the opportunity to submit text questions to today's presenter by typing your questions into the questions pane on the control panel. You may send in your questions at any time during the presentation, and we will collect these and address them at the end of today's presentation. So now, thank you for the State Bar of South Dakota and any other and SDSU for putting this on for today's program. I would like to now introduce Dr. Matt Elliott, professor at South Dakota State University and extension specialist in the Ag department. So, Dr. Elliott, the floor is all yours.
All right, thank you, Ryan. Can you hear me all right?
Yep, I can.
Okay, so I'll go ahead and get started. My name is Matthew Elliott. I'm going to be discussing the statutory ag land assessment methods, specifically here in South Dakota. This presentation you can get online if you go to agland.sdstate.edu/assessment with a capital A. It's case sensitive. Now, the presentation might take like 30 seconds to load. It'll look like a black screen. Trust me, eventually it'll load. And then you just need to click on it, and then you push a down arrow on the on your keyboard in order to switch through the slides. So if you want to pull the presentation up, that's how you do it. So just a little bit by way of background, in case you're not familiar with how South Dakota does ag land assessments throughout the state. We've used the productivity formula since 2010, and this is based off of an income capitalization approach to appraisal. So there's the three approaches to appraisal that you probably all are aware of: sales comparison, income capitalization, and the cost approach. Well, we use the income capitalization for the ag land assessments. And so when you do an income capitalization approach, you make the assessment by dividing the estimated annual net income, or a rent, by a capitalization rate. And then I'll go over that in a little bit more detail here in a few slides. So most states throughout the United States for their ag land assessments use an income capitalization approach. There's a few that use kind of a hybrid model. Nebraska is one of the few that uses generally market values for their approach, but most of the other ones use a income capitalization formula. Okay, so there's two formulas in South Dakota for assessment. We have a cropland formula and we have a non-cropland formula. And so prior to using each formula, the assessor must determine what is the highest and best use of the land. In the case of South Dakota, we based the highest and best use assessment at the soil map unit level. So each soil map unit level has its own highest and best use. And so that's what determines which formula you use when you're making your ag land assessments. So the productivity formula in South Dakota has two parts, and I'll go over each of these in more detail, but just to kind of give you an overview. So the productivity value itself, and then we talk about a cropland productivity value and a non-cropland productivity value. And then we'll get into the soil ratings and how those go into the formula, and both those parts end up making the assessment. For soil ratings, we really pay attention to what we call a crop rating and a range rating, and I'll go over these in more detail. So let's just start with the productivity value part of the formula first. And so how do we determine the cropland productivity value? It's from county level USDA-NASS data. We look at the total production at the county level for corn, wheat, soybeans, sunflowers, hay, and sorghum. And then we divide, take that total production, we multiply it by the price received for each of those crops during that year according to the USDA-NASS prices received survey data. Then we divide that total revenue by the total planted acres for those crops, or harvested. In the case of hay, we used harvested acres. The acres that we use as a denominator in this formula for cropland productivity is not the total amount of acres in the county. So there's some confusion about that, but we only include the acres that USDA-NASS has reported for that county for those production levels and for those crops that we look at. And so you're going to have differences in the number of acres on our denominator compared to how many acres are actually cropped in that county. And so on the right side here, we have our the different formulas. So we calculate these productivity values each year, but for the assessment value that we use, the average assessment productivity value for cropland is an 8-year Olympic average. That means we drop out the high and the low over an 8-year period, and then we average the remaining 6 values. And so the revenue per acre, we calculate using that production times price data. We take it times the 35% as an estimate for a landlord share, or what we would consider a net income. And then we divide by a 6.6% capitalization rate. Now the 6.6% is in statutory law. We don't let that fluctuate, though we can provide recommendations on an annual basis whether that needs to be, that value needs to be updated or not. But that 6.6% capitalization rate is in statutory law, and so that's why it's fixed like that. So some of the issues we have with our cropland productivity values, one, we have missing data. USDA-NASS is continually not reporting as many crops at the county level, and even prices and so forth. And so we're ending up having to impute a lot of these values at different times for certain counties where basically no cropland production's being reported at the county level by USDA-NASS. And this is becoming more of a frequent occurrence, and partly due to lower response rates on USDA-NASS surveys. And they have to maintain a certain threshold of how many respondents are in the pool, and that there's no privacy concerns by releasing the information they do have. So if they don't have enough responses, then they just don't report it, and so that creates some missing data issues. And the other, so sometimes the county will not show any cropland production, and then that's when we impute the value, but sometimes they only show 1 or 2 crops. So for example, in this last coming year, and I'll show you a graph here and just a slide, you know, they don't report the corn revenue value for, say, Brookings County. And when that corn number pops off the revenue per acre, then suddenly the whole county revenue per acre on average drops quite a bit for cropland value. And so we get these kind of noisy annual indicators using this county NASS data because they just don't report all these crops in a consistent basis year after year. Other issues that have been raised about our cropland productivity value is that we use a statewide average price for these crops. You know, there's been discussions at different points in time about using local prices, which is something that we, you know, could include into the formula, but given where the statutory law is right now, it just doesn't allow for that flexibility yet. One other issue that's kind of been raised about the cropland productivity formula part of it is that, you know, when we had the boom cycle, when we had the high prices of corn, soybeans, and wheat during the 2010 to 2013 period, we really saw increases, large increases in our cropland productivity values and therefore cropland assessments. Yeah, and then we haven't seen, since those crop prices have come down here in the latter half of the decade, we haven't really seen it drop, and that's because that 8-year Olympic average is really smoothing, and so it hangs on to those big price years for a lot longer. It also took a little longer to see that boom start, but it takes a lot longer to get out of that boom too when you use that 8-year Olympic average. Oh, well, now I gotta. So this is an app. I'll reload it here. So this is an app that we have online. If you do that agland.sdstate.edu/capital DOR, you can get all these cropland productivity values up on the charts and for the different counties. So you can just select these different counties, whatever one you want to look at. And I also have it linked in the presentation. So if you just hit this, it'll pop up the app on its own. But this is Aurora County. And so the white line is the cropland revenue per acre. And if you hover over these points for each year, you'll see all the data that's being used. So as I said, the corn grain measured for production is in there. So for Aurora County in 2019 here, 7 million bushels produced. The average price in South Dakota was $3.70. The number of corn acres planted, according to the data in Aurora County, was 64,700. And so then you can see all our calculations there, and then the $390.21 cropland productivity value for Aurora County for that particular county. There's a lot of the different crops that we have also in that calculation: corn, soybeans, and winter wheat. Now this green line this is our model that we use if we have to impute the values. So in Aurora County, we have all white values. NASS is reported every year, cropland numbers, and so we haven't had to impute anything. But I provide the imputation predictions for all these counties and all these years, just in case you can see how it fluctuates with the actual data in the NASS database. But if we had to impute, this is where our imputation values would have been. Now the yellow line is the 8-year Olympic average that would be occurring, and so you can see it came up and was increasing during those high commodity years, but it's kind of leveled out since that 2014 year. So I was going to show you Brookings County here just as a missing data type of issue. Here's for Brookings County in 2019, they typically report corn and oats and soybeans, but in 2019, USDA-NASS only reported oats. And so we had a big drop in cropland revenue per acre on an annual basis. It didn't really affect our 8-year Olympic average that much, but it does create quite a bit of noise in our database because they just didn't report those crop acres. Our predicted value was much higher. You're at $339 per acre. So now turning to non-cropland productivity value. So I just discussed how we got to the cropland productivity value. For the non-cropland productivity value, it's also at the county level. We also use USDA-NASS data, but here we use the pasture land rent. And then we just take that rent and we divide it by 6.6%. And it's the same thing. We have an 8-year Olympic average. So we drop that high and low out. So some of the issues with non-cropland productivity values, some of the rent values can fluctuate quite a bit. There's different reasons I have in my own mind why that could be, but some of them are pretty smooth. Other counties, and I'll show you in just a second, like Charles Mix has kind of got some different things happening in it. Also, we're having to do a lot more imputation with the pasture land rents because either they don't report it because of non-reporting or because of the low reporting issues, or they've changed their collection methods, so they only collect the pasture land rent on a biannual basis now. So every other year we have to go in there and impute all of them. And we use a model that includes changes in cattle prices when we make these imputations. And I'll show you, I have the app, and I'll show you again kind of where our imputations are with those rents and things like that. In the East, on pastureland rents, we generally see that those are influenced by what's happening in the cropland rental rate market. So if cropland rental rates are increasing in the East, generally tends to pull up the pastureland rental rates as well. However, in West River, we don't really see that relationship, so that kind of creates an aspect that we need to model as well. So we allow those cropland rental rates to influence the eastern pastureland rental areas, or where it's been shown to have relationships, and we discount it kind of out in the West River area. I'm sorry, I should have had these reloaded up. So if you just go to the app and then you hit the non-cropland, you'll have the same graphs that you can look at for the non-cropland rent value. And so one county I was going to show you is Charles Mix, where we see some crazy stuff happening. So this white line is the actual USDA-NASS pastureland rent, and we get these break values. So this green line again is our predicted value. So if we have to impute, so here is in 2015 was one of those years we had to impute because they did not collect any pastureland rent data in 2015 or 2018 or 2019. So we had to use these green values. And one thing about Charles Mix County is we predict a lot higher rental rate than what's being reported, especially in these early years in Charles Mix. And that's basically because looking at the surrounding counties, it was much higher. And to smooth that out, so you didn't have as much of an abrupt change based on a political county line, we're predicting a higher value here. And you can see actually when they reported the value in 2014, it was much higher than the value they were reporting back here prior to 2013. And even when they reported a value in 2017, it jumped up again. So actually the latest reported values start looking more like what we would have predicted them to be. But why these values back here were so low, I'm not quite sure. I mean, this is some of the rental data that USDA-NASS puts out from that survey data that, you know, it's hard to explain sometimes, especially if you're looking in surrounding counties and things like that. Again, the yellow line is the 8-year Olympic average. So for Charles Mix County, the non-cropland productivity value is $37.10 per acre. So now I'm going to turn to the soil ratings part, and this gets a little bit more complicated. So in the soil ratings, we have two parts. Again, first, we need to determine the highest and best use at the soil map unit level, as I mentioned before. And the traditional practice for that in South Dakota has been using the NRCS land capability class. And then we calculate a soil rating, and we do this for all soils, but each soil has a crop rating and a range rating. So first, we'll just talk about the highest and best use part. So the NRCS land capability class is 8 classes that basically discuss the limitations of each soil for cropping purposes. Classes 1 through 4 are generally accepted to be have the ability to be cropland or cropped soils with, you know, with minimal management limitations. Now, as you go up to class 4, you get increasing number of management limitations to try to use a class 4 soil for cropping, but you can still use it, and according to the NRCS, without too many problems. Class 5 through 8 generally have a lot of different aspects to them that make them pretty unsuitable for cropping. And so class 1 through 3 are automatically considered cropland under the current policy. Class 5 through 8 are considered non-cropland automatically in the current policy. And then class 4 is a mix, and in the mix, it depends on what the crop rating was for the class 4 soil and the range rating. If the crop rating is greater than the range rating, then the class 4 soil is considered cropland highest and best use. So this is one of the things that we've been looking at over the last few years is how has that policy of dividing up highest and best use by cropland, non-cropland using that land capability class, how does that differ from actual use? Or we built a model that looked at, you know, the probability of using the soil mostly as cropland or non-cropland. And so this is just a map showing you where cropland acres are by number of years. So dark green indicates between 2012 and 2018, 7 years, these areas were used as cropland according to the USDA-NASS Cropscape. And then some of the purple areas, which you can't really see at this zoomed out level too well, but there's only areas where maybe 1 or 2 or 3 times 3 years of those particular areas was used as cropland. Now there's a lot of noise in the spatial cropscape, and so that's why we use multiple years. We look for a pretty consistent pattern of seeing an area being cropped in order to determine it's been cropped throughout that whole period. So when we look at the actual use compared to our highest and best use policy, this map kind of indicates where we have divergences. So red is where we are assessing the soil map unit as being cropland, but it's actually being used as non-cropland. Green areas indicate where we are assessing the soil map unit as non-cropland, but the individuals, the property owners, are using that property as cropland. You can see from this map that there's a lot more red areas than green areas, and so switching to an actual use policy, we're showing or found that would have a significant decrease in our statewide ag land assessments. And this is especially true out in West River. In the eastern areas, eastern counties, we don't see as much change. We're not seeing as much red, but when we get out in West River and some of these counties, we see some major divergences over large acres. So when we calculate the crop and range ratings, on the left side, we do this in order to determine the relative productivity of that soil map unit within the county. And we do that in order to, we have that average productivity value, but that's the average. So that's the average soil is going to get the productivity value. Anything above average soil is going to be above that productivity value in that county. Anything below average soil in that county is going to be below that productivity value in that county. And so we need these crop ratings in order to know, you know, how much above you're going to get above that average productivity value, or how much below, or are you going to be at average. And so that's what these crop ratings and range ratings are doing. And so we use the NRCS representative yields in their soil database in order to calculate these crop ratings. And the crop rating is basically an average of taking the corn representative yield for that soil divided by the max corn representative yield for all the soils that are cropland in the county. And we do that for wheat, we do that for brome grass alfalfa, we do it for soybeans in the eastern areas, and those are the ones we use. We use corn, spring wheat, hard red winter wheat, brome grass alfalfa, and soybeans in the east. And so we do that as an average, and that's how you get your crop rating. So crop ratings, you can't really compare a crop rating between different counties and say, you know, my crop rating in Aurora County is 0.9, and so that means it's better than a Beetle County with a crop rating soil of 0.8. You can't do that because it's based on within the county county data. So in order to figure out that top dollar value, that above productivity value, we have this what we call an adjusted crop rating. And so we take that crop rating times the weighted average county crop rating for all cropland soils. And so that will be a value somewhere between, anywhere between like a 0.1 to, it could be 2 or 3 or 4 times the average cropland value, but most of the time it's like a 1.2. And so what that means is if you have a 1.2 adjusted crop rating, you take 1.2 times your cropland productivity value, and that's going to be your assessment value for that county, for that soil map unit. So it's 20% above the average if it was 1.2 as an adjusted crop rating. But that's how we get to that assessment value from those crop ratings and then the cropland productivity value. We do the same thing with non-cropland, but here we use an NRCS representative range yield production, and we adjust it for the amount of range species that, or the composition of range species on the soil map unit according to NRCS. And we calculate that range rating by taking that forage yield divided by the maximum forage yield for all those soils in the county. And then we do the same type of thing for an adjusted range rating. We take the range rating divided by the weighted average county range rating for all the non-cropland soils in the county. And the weight we use here is acres. So if the soil map unit doesn't have a lot of acres in the county, it has very little influence on the weighted average rating. Where we have larger acres of soils, they tend to push and pull that average rating wherever it needs to go. So there's quite a few more issues probably with the soil ratings part of the formula than the productivity value formula, at least in my mind. Again, I've already kind of talked about this, but using the dominant NRCS land capability classification system to determine highest and best use is problematic. First, we're not considering how the soil is being used in a typical highest and best use analysis or most probable use analysis. You would be looking at how generally is that soil or that type of parcel being used, and we don't really take that into consideration in the formula in its current form. And so that's why we have a lot of these divergences, because we're not looking at those uses. And so that's one major issue with it. Again, we have missing data with NRCS. We have to impute, we have models. I'll kind of discuss that just a little bit here. One kind of smaller issue is NRCS reports your range production level in some of these low-lying areas and marshland areas as being really high because they count a lot of biomass from cattails and different items, brush, in these lowland areas that maybe are probably not very suitable for forage production. And even though we try to control or adjust for that, we're just still getting pretty high marshland ratings. And so we've kind of gone in there and artificially lowered those to lower amounts, but that's one issue that we've run into. Also, water boundaries in the NRCS soil map units or soil maps are not updated frequently. They're not accurate like you can get very accurate surface water maps and fluctuations in surface water. The soil maps are generally not as accurate for determining water boundaries. So our water boundaries are probably not exact to what the water boundaries are, especially in areas where we've seen a lot of fluctuation and surface water changes in South Dakota. Another issue with the soil ratings is we do all the analysis and calculations at the soil map unit level. The soil map unit level has multiple components, 4 or 5 components with different percentages of the composition, and they each have their own different attributes and ratings and classifications, but we only look at the dominant one. And so if we have a lot of variation across the soil map unit based on the soil components, we can be making assumptions about the whole soil map unit that's not exactly true or could be applicable to the whole soil map. And so that's one issue is we just don't incorporate all that soil component information that makes up the soil map unit. There's a lot of differences across the soil map unit. And so this table I kind of just put together is kind of a crude estimation of some of the differences we've seen in ag land sales value over the last 5 years by land capability class, and then we compare that to our assessment assessed values. And so here we have the land capability classes. I just picked 2 counties here that I have some data for. And so generally when the parcel was mostly made up of, or averaged about 2 on a weighted average basis, class 2 soil, the sale value in Meade County was about $817. You'll see we didn't really see a lot of difference in sales value across these different land capability classes in Meade County. I mean, even class 6 soils and parcels with mostly class 6 soils, parcels with class 5 soils, we're still running about $800 per acre according to these sales. But our assessed value changes quite a bit as you go down that list. So we have a very high assessment value for class 3 soils, and class 2 soils drops down quite a bit to when you go to class 6 soils at $234. So we have these major divergences between what the market's putting these soils and parcels at than what we are assessing at, and this is based on that class system, and it's probably it's worse out in West River, as I mentioned before. So Meade County, we're not surprised to see some of these issues. And I should also say as a caveat, some of these 6 and 7s could be recreation type high sales values, if you're close to the Black Hills region, and it's pushing up these class 7 soils that are very steep and hillside type situations. But like I said, this is a very crude estimation. I don't have just strictly ag land filtered out here. But if we compare that to say like Spink County average sales value, we see a little bit more of a change in value as we switch to those class 5 soils and class 6 soils. So 2 and 3, $2,800 an acre, $2,500 an acre on average for these class 2, 3 predominant parcels with these class 2 soils and class 3 soils. In class 6, we see about $1,800 per acre sold for like a class 6 soil. We can compare that to our assessment values across these different classes here. So again, we have a major drop off, and as you go to class 5 and class 6, we're assessing class 2, class 3, $2,400, $2,000, and class 5 to class 6, we're assessing only about $1,000 to $704 in Spink County. Okay, so this is another app that I just put up here. So I mentioned that we have to impute a lot of the NRCS representative yields, and if I can get here we go. So this app, you can actually look at how our imputations kind of work. You can pick the whole area, or you can just pick an Aurora County, but we're just seeing how well our model does to the values that NRCS does publish. So this is the corn representative yield. So as I mentioned, for making those crop ratings, we use those representative yields for corn, soybeans, brome grass, and wheat. And here I'm just looking at corn, but the NRCS yield for this particular soil map unit and this soil component was 55 bushels per acre. Our predicted value was 56.8, so we're pretty close on that. We're pretty close. Our model is pretty close at figuring out how NRCS puts these representative yields. So we have generally high confidence in when we're doing these imputations for yields for all the components that we're missing in the soil database. But you can go through here and look at the ones that and compare our model results to what NRCS has published. And, you know, this might be one of the more outliers where we're 5 bushels difference, and the type of soils, you know, if a class 2C, class 2E, and so forth is listed here. But you can do this for all the crops in this app that we use. And so you can see how that works out for across the different areas in South Dakota. So this is another app that we have. This is kind of our major app of showing the soil tables and the soil ratings across the state. So if you push the control tab, you can change the county. You can change the type of soils you want to look at. If you want to look at cropland soils, non-cropland soils, or all soils, class 4 soils, or just a specific soil. You can look at whatever, you know, we have a bunch of variables here that you can map and color code in here. So the crop rating, the range rating, the highest and best use, just the assessed value or whatnot. And when you make your selections, you can just come back here to the map portion. And then you, if you hover over, you know, whatever parcel, you can see the different soils. So each soil delineation has in the center of that soil delineation is a point with the data. And so this particular soil here, HCC, Hudek, Ethan, Loam, 69% slopes. It has a crop rating of 0.69, a range rating of 0.64, an assessed value of $1,900. And the percent has been cropped over those periods, 57%. And then we have our probability level of what is it if it will be mostly used as cropland. We also have all the data. If you push this table 1, table 2, and table 3, all the data that we that goes into these calculations using those formulas I talked about before are in here. Now to scroll in the app, you just got to select it and then push your arrow button over to see all the different data. But you can also just download this into your own Excel file, and you can maybe view it more easily in that form. We also have a document under the methods tab explain kind of what I've gone over here of all the different how we get to the soil ratings, but in limited extent to how we use that productivity value in combination with the soil ratings in order to come up with that assessment. I talk a little bit about our limitations and things like that. So there's a lot of information in this particular app. It's called Soil Tables. It's on our SD Extension website. But if you just go agland.sdstate.edu and then /soil_tables, that's how you get to that particular app. And you can zoom out, change base maps. You can do whatever you want. But this is looking at the cropping percentage in Aurora County. But all the data for across the state is all on that app for the soil ratings and the assessment values. So if we just looked at, you know, baseline assessments, I think for this was last year across the state, generally our assessment value is about $2,700 to $5,000 assessed values down here in the southeast portion. You know, and as we move west, obviously we start going down in values. Here in West River, these yellow parts, these are where we have more of our issues with property owners that the assessment's too high because some of them are around that $900 to $1,200 mark, and maybe the market value is only about $800. And because it's being assessed as cropland, even though it's generally being used as non-cropland. And so that's where we see a lot more issues is out here in these West River, especially as we call these class 2, class 3 soils in these lower areas in West River as cropland, even though they're generally being used as non-cropland. So one of the major changes in the law here in the last session was related to adjustments. I'm going to just talk about that just a little bit here now. So the adjustment statute has been there, but there's some revisions to it in this last session, but this is the updated description. I'll try to point out some of the major parts that were changed. So each adjustment's going to have to be documented, and now they have a form to actually document these adjustments, and then the assessor is going to have to maintain that form and make a determination for that adjustment, whether a soil gets adjusted. So you can request that you know, a certain soil be adjusted or a parcel be adjusted from a cropland highest and best use to a non-cropland, or try to adjust the crop rating to be lower than maybe the crop rating is according to the baseline value. But one of the major changes in the law here in this last session was if the actual use of agricultural land varies from the land use category specified by the soil classification standards, or if any factors listed in subdivision 2 exist that affect the productivity of land, the property owner may request an examination of the land by the Director of Equalization on a form prescribed by the department. And then the director shall determine whether to adjust the assessed value of the agricultural land pursuant to the factors there. And the director is going to have to document this and let you know. So that was a major change. That actual language was not in the previous law. And so here I have the link to the document that the Department of Revenue has put out. So it looks like this. It's the fillable form that you submit online. So you put your name, all your information, legal description, and then so each one of those factors that's listed in that law for adjustments, it allows you a box to type in here why you think your particular parcel or your soil map within your parcel should be adjusted. And so we have, you know, location, they have a description here, size, the soil survey statistics affect the productivity, and the terrain, topographical conditions, climate, accessibility, surface, and et cetera. And then you sign and you can submit. So that needs, that's out there for adjustments now. That hasn't really been formalized in that kind of form to allow landowners to make those official requests, and it'll require the Department of Revenue and the Director of Equalization to actually respond to your request. Now, so this is just me talking, but I'm just going to kind of go over some of these factors of how you might want to think about whether you should, how you should make an argument for an adjustment, or the factors you might want to be thinking about if you need an adjustment. You know, where we have some of those major differences in the use of the soil and how we are assessing it. So if it's a cropland soil because it's a class 3 soil out in West River, but most of people are using that soil, say only 20% of the soil is being used as cropland. There might be in the locational argument you can make in the sense that there's not enough infrastructure, the roads aren't sufficient, you don't have a reliable marketplace to sell a crop like wheat or corn or, you know, or anything like that. And so that would be one of those types of locational factors that you can make an argument. There just isn't the infrastructure to support intensive cropland production in your region. The distance to the market would create so much in transportation costs that it would make it less feasible for you to convert some grassland to cropland and so forth. So that's how I would look at that location argument, and that's the kind of argument I would make for that type of category. Going to the size part, you know, if you only have a parcel of 30 acres and that's it, that's all you own, it's pretty hard to maybe justify that you can make 30 acres of wheat production in West River be a living in. And so I think that there's arguments about how you have to have a certain amount of size, a certain number of acres of cropland acres and so forth in order to gain the scale efficiencies that in order to make that economically suitable. Odd shapes too, if you have a very cut up parcel or something that's not very square looking, that might be a sufficient argument. Again, so soil statistics. So in that app, I showed, you know, we have all the different soil components, and I talked about we base the highest and best use off that dominant soil component. But if the minor soil components have a lot of limitations and you feel like you have more of those minor soil components, I think you make your argument about the soil statistics here in this box related to this minor soil components are more predominant on your particular parcel than say the whole soil map unit. So that's one of the things I would look at. So, look in that data in that app, looking at the different textures of the soil. So how much clay, how much sand, or how much loam it is, and if it's very different from what the major soil component is, that would be a key factor. Also, if the slope percentages, so in that app we have all the slope percentages for the whole soil map unit, but if your slope percentages are different, if you have much more slope to your particular soil on your parcel than the soil map unit, then I think that would be a sufficient argument for an adjustment. Climate, again, if you have a different climate, that would be another type of issue. Salinity issues, obviously. Drainage and flooding. So automatically in the law, if you have flooding on a particular portion of your parcel for 3 or more years, you can automatically get that adjusted to basically a marshland or a water rating, which is 0.1 non-cropland rating, and it'll be reassessed that way for those portion of acres. Topography also, so again, I kind of talked about if the whole slope's different from the soil map unit, make note of that. If it's really rugged and kind of changes, that's another issue. So if you have outcroppings, different things like that, I think those are important factors to look at and make an argument in that particular document related to the topography and the terrain portions of that document. Accessibility, what they typically refer to as accessibility, is if you have a cropland soil that in your parcel that's locked or surrounded by non-cropland soils, it doesn't make it really feasible for you to be using that cropland soil as a cropland if it's just 20 acres in the middle of your large quarter section that's all surrounded by non-cropland soil. So that would be an accessibility argument if you have that kind of situation. If you have a cropland soil in the middle of a ravine in your particular parcel, then you can make an accessibility argument under that category. So that's kind of what I have now. If I have questions, I'll take those now. My contact information's right there. I'm more than happy to answer questions or send you links or direct you to information or material to help you with kind of navigating the document for adjustments, but also if explaining the policy or any other questions you might have. So Ryan, I'll let you take. I haven't been looking if there's questions or anything like that.
Yeah, thank you again, Dr. Elliott, for your presentation. And I have a couple of questions from a few people that were, I guess it was just geared specifically to me. In the very first question, I think you kind of alluded to it a little bit, but with all this stuff kind of going on in Minnehaha County, Pennington County, can you just kind of elaborate, maybe even talk a little bit about how the values in certain counties with respect to land, do you envision them going up? Do you envision them kind of staying stagnant going forward, or kind of what is your vision of how values are going to be going forward? Was the first question.
Are we talking about actual market values, or are we talking about ag land assessments for property taxes?
Can you just address both, maybe? I think that's
yeah. Okay. So for market values, I think there's, especially with the recent changes in commodity prices and the fact that we are in a pretty low interest rate environment, and suddenly all the interest rates increases they were pushing and the goals the Fed was moving towards, prior to the COVID pandemic and kind of the softening of the economy, I think that market values are going to stay well supported in the near term, if not go up here. I think, if you haven't been paying attention too much, the the commodity market, corn, soybeans, have kind of really changed on a dime here since March. You know, getting into a tighter supply situation and a hotter export market than we probably anticipated. And, you know, that's pushed up new crop prices and even old crop prices up to, you know, pretty reasonable levels now, where there's certainly a lot of profitability. Now, how long that continues, I mean, that's always a question mark. And then we've had a lot of government support programs to, you know, kind of soften the blow from the lower commodity prices the last few years, and those might cease to exist with the change in administration. But you know, I think from a general standpoint, I guess I'm more bullish ag land values currently than I was 6 months ago. And you know, I think if you sustain these commodity prices where they're at, and you have lower interest rates where we have, I would think the market values are going to be very well supported at their current levels, if not increase. Now, as for assessment values, I don't think we're going to see assessment values change that much. You know, from the productivity formula standpoint. I mean, as I mentioned before, it's going to take quite a few years of bullish prices in order to, you know, really start jumping up or increasing those assessment values. And so I think that I wouldn't expect wide changes in that area unless, I mean, it just with our 8-year Olympic average and just where prices have been in the past 4 or 5 years, I just don't see that happening.
And the second part of the question, I don't even know if there's any real statistical numbers or any real information based on this, but kind of going off that same topic, do you see any impact with the new legislation with marijuana being passed? Is that going to have any impact on anything within land values, or even from your sense, if it does, would it have an impact on the assessed value at all?
Not with the assessed value in my horizon. I mean, we have not discussed, you know, hemp production, what that value. I mean, there's just no NASS data collected on that, and so our statutory assessment laws are all using NASS data, and I know NASS is not collecting anything at the county level that would pick up on that. Now, as for market value changes to the marijuana law, you know, I think that we're going to have to see. I think there'd be quite a few years where, you know, that would be in effect. I really haven't looked at it saying, you know, some of these other areas of Colorado or in some states that have legalized marijuana, if there was really a large impact on ag land values. I think it'd be more localized than anything. You know, I just think between the number of acres that you're probably looking at for, you know, the number of acres that you probably need for hemp production, marijuana production, and getting the permits are going to be important more so than the number of acres. I just don't see that as being a major factor to changing ag land values overall. I mean, at least at this juncture, I think there'd have to be a lot more demand, and you need a lot larger scale of hemp or marijuana production that's sustainable and feasible in order to drive up ag land prices in general.
And then one last question. How do you get the production numbers for the land? Are you using crop insurance numbers, since those might be the most accurate?
So in the statutory law, we use, it specifies use NASS county data. So that's not the RMA yield numbers, that's aggregated, you know, based off of crop reporting. And there's a lot of different people have looked at this. Generally, there's not a lot of difference between the RMA yield values that of crop people that report that for crop insurance purposes compared to USDA-NASS county data. Sometimes there is differences, but we could use either one from our perspective, SDSU collecting and doing the calculations. But in the statutory law, we're required to use the NASS county data, so we don't use the RMA data. And I haven't specifically looked at if we switch to RMA, what kind of effect, or if much impact that would that have. I mean, I just haven't looked at it here recently, but I think previously when people have looked at it, I didn't think there'd be much difference, and some other states have looked at it for different purposes, and you know, every once in a while you'll see a difference, but it's not a large difference.
And then one last question for you, Dr. Elliott. Where exactly does the statute say that actual use can be used as a basis for adjustments?
So I unfortunately I did not put the law number in there, but it's going to be in the 10.6. I can't remember. It's going to be 10.6.33, but this is the actual language of the law. I just don't have the number up there, but this is the language of the law itself. And then right here, if the actual use of agricultural land varies from the land use category specified by soil classification standards, or any of these factors exist, you can request an examination of the land by the Director of Equalization. So it's explicit in the law. If you have a difference in actual use from how the highest and best use is according to the soil map unit on that same parcel, you have the right to request an examination, and they have to do an examination.
Well, that wraps up our questions. So first and foremost, I want to say thank you, Dr. Elliott, and thank you for the time and everything that you've done for us. If those in attendance have any additional questions, please contact the State Bar at info@sdbar.net, and we'll get them directed to our presenters. Once you leave today's webinar, you will receive a survey on the presentation, and we would appreciate if you complete that survey and provide us your feedback. On behalf of the State Bar of South Dakota and SDSU Extension and Dr. Elliott, thank you for joining us, and have a great rest of your day and have a great weekend.
Thank you.